want to thank the team here at Spark Cognition. It's always a pleasure being with all of you, pleasure being in Austin. Thanks for decorating this venue based on my dress, apparently. I'm going to talk to you a little bit about the future of finance as it relates to AI and how I got into this field a little bit. So beyond what John said, I recently led the venture capital arm of the CME group. Some people may be more familiar with our products, I suppose, than the CME, but whether it's gold or oil or interest rates, now very soon Bitcoin futures, that's traded on one of the exchanges, whether it's NYMEX or the Chicago Board of Trade, Chicago Mercantile Exchange, so on and so forth. A few years back, the board of directors there said, what is that next disruption that's going to happen for our industry? And how do we get ahead of that? So I was tasked with a great team to lead the thought and the investment and then the strategy and the implications of, say, 3 to 5 years out, what technologies will become financial technologies. So you can imagine where AI fit very early in our outlook and our approach as we considered all of this. So as I think about the future of finance and the combination of money and the brain, I think it's also very important, though, to understand that there's still ultimately a very basic human need, right? Money makes the world go around. The world's been going around since the beginning of time. For anyone who's familiar with the Ashango bones, so this is from 22,000 years ago, right, in the Paleolithic era in Congo. They found these bones, and they said beyond just counting, this represented some type of thing beyond just, there's some mathematical succession here that somebody was trying to notch into these bones. This served as the basis, you can say, for what eventually became tools to calculate money, transactions, so on and so forth. So whenever I think about the future, I always ground myself in the past. I think about things like this and where we evolved to a point where this was, or it's supposed to be. What did I do? Sorry, guys. NYMEX, all right? So people, and this is one of the CME Group's companies, New York Mercantile Exchange, where you can trade oil for the most part. You see lots of people, lots of screens, and today it looks like this, all right? There are no more pits anymore. That's gone. But for me, I still see, though, people and lots of screens. Those will probably be changing as well. The question is how. So as we think about the future of finance and what's going to be happening over time, artificial intelligence, as mentioned, is something that many, many people are focused on. I want to get this right, so bear with me as I look through my notes, but Deloitte put out this research report, and one thing that I was struck by, they said, amongst finance, for investments in cognitive systems, it's going to drive revenues from nearly $8 billion in 2016 to $47 billion in 2020. Just by 2020, it's going to go that fast. But that finance is one of the top 2 industries that's leading that. So AI is going to have a big impact on finance, but perhaps also interesting to me is for the people who are involved in this industry. I think this was a separate Deloitte study, but 94% of people working in financial institutions, this was based actually just across Europe, but it wouldn't be surprising me if this is for everyone. 94% expect that AI is going to disrupt their business. And 37% said it's going to be highly impacted. And then 88% said AI is going to be mainstream within 2 to 5 years. 47% said that's within 2 years. But on the flip side of that, they asked people, well, how many of you have appointed an AI head? Only half of them had, right? And they also asked the financial institutions, well, where are you on the AI learning curve? Only around half of them, again, said we're not doing anything right now, or we're just studying it, despite the fact that they recognize that this is going to happen really quickly. So, okay, sorry. So I just want to talk about, say, the 6 groups of where you're probably going to see a lot of impact in financial services, customers, operations, regulatory and compliance, trading and portfolio management. And then I want to talk about if that's going to push a little bit into the future stuff in terms of its impacts on the global financial system and the other things coming our way as well in financial services. So regarding customers, we're already seeing a lot of AI today. We see this in the peer-to-peer lending space where people are able to use different types of customer inputs in order to make decisions. So a lot of credit quality decisions are being enhanced by AI. We're also seeing this in the little chatbot that we hear today. Usually this is, again, a little bit more the responsive. So a customer will come in and you're cutting down a lot of manual processes and say, what happened to my trade, right? And the chatbot can explain, oh, it was executed today at 4 p.m., for $3 or whatever. This, though, I see some advancements. Financial institutions are a little bit hesitant to do this, though, in terms of the predictive chatting back. So, for example, if the market's going to be hitting $40 and whatever you want to trade, the little chat bot or somebody will say, hey, are you paying attention? It's going to hit 40 soon. What do you want to do? Or even suggest, oh, did you see that gold moved up as interest rates went down? According to blah, 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 you may want to do this now. So you're starting to push into financial advisory, which can be helpful for a customer, but you also run into some perhaps potential regulatory issues, which people in the cryptocurrency world right now don't care so much about. I've seen a number of companies already that are building Bitcoin chatbots to be able to push ideas straight out at you to tell you how you should be trading. On the operations side, this has a lot to do with capital management. The right amount of regulatory capital, for example, that a bank may need to hold on its books. It's a way also around stress testing. For those who remember around the global financial crisis, as banks and other financial institutions wanted to know, can my bank make it through the next big disaster type of a thing? We're seeing a lot of AI inputs helping banks manage that type of risk. Where this is pushing, however, though, comes, I think, for a lot of market trading decisions that financial institutions have to make. You can imagine before you go into a market, especially in one with illiquid securities, by you simply entering that market, you're going to change it, right? So it's like throwing a rock into the puddle of water. It has ripple effects. Many trading institutions need to know, well, if I want to buy this, what's going to be the effect of my actions on something like that? So the nature of those questions get a little bit more complex. You're also thinking about your competitors' movements in that regard. So there's predictive capabilities there as well as fundamental analysis of the market. As we also think about fintech, there's an area what we would call Reg Tech. Perhaps so many of you are very familiar with this, but how are regulators adopting technologies? And this goes into market surveillance, market fraud and risk, and so on and so forth. When we were at the CME Group, or when I was at the CME Group, I speak in the royal we a lot still. When I was at the CME Group, and one of our other investments in this field is a company called Nirvana Systems, and Nirvana was purchased by Intel for its deep learning capabilities. But we were actually using Nirvana to look at our order book, a visualization of the order book. Usually you would just look at numbers, but what Nirvana was able to do was apply deep learning vision technologies for an analysis of an order book and be able to see at what moment of time did a trading pattern look just like any other moment of time graphically and be able to layer that on each other. And it was very, very useful for not just our market reg people, but for clients as well. Another area in this overall topic is what I would call, I don't know what the best way to call it, soup tech, supervisory tech? I said soup tech. Anyways, supervisors, as we're talking about central banks and monetary authorities, as they're overseeing financial institutions, it's a way to look at their behavior, not just of institutions themselves, but also of customers. The Central Bank of Italy, I'm not sure if they published this study, but they certainly wrote some about this. For example, they were looking at Twitter feeds to gauge customers' sentiments about banks, just how they were feeling about it, to assess whether there could be a run on a bank or how people were feeling about the safety and the stability of banks. So that was something interesting that I hadn't come across yet, but financial institutions and customers and their regulators all together are focused on ways to employ AI as we think about the overall health of the system. Another area, and this is now where we're going to start to push forward a little bit in terms of the unknown, is in trading and portfolio management. A number of hedge funds, as you may know, these so-called quantitative trading firms, been using a lot of AI. For the most part, though, they claim that it's just one input into their decision making. They still want to have full understanding of what's going on. And there can be a black box quality to the way machines continue to make decisions and make recommendations for you. So quant firms say this is what they do to a limited degree, but I would guess that it's happening a lot more than they may want to say, just from the proprietary nature of their operations. Spark Cognition has done fantastic work in this regard. And I remember this one talk that Amir gave, actually. It's like, if you think about what makes a good trader, right? Usually in the past, traders had been in the market before, they had that experience, they'd seen things, and they could act on it. They had what you would call a feel for the market, right? But you think about where robots, where machines, where algorithms are today. You know, they can hold vast quantities of data, far more than your head can, right? And they're now able to process in real time what's happening around them. What you used to expect to hear on the trading floor, a machine can now be able to process in such a way that machines are starting to feel the market too. And that type of cognitive capability, I think, will be fundamentally transformative to trading in the future. As AI becomes more ubiquitous, however, there are a lot of associated risks that are also unknown. 2008, that financial crisis, almost 10 years ago now. And think of how much AI has developed in that time. Think of how many financial institutions are beginning to use this. We have a very integrated global economy. But if AI also makes things easier or reduces costs, it can also have institutions, even regulators, start to use similar systems in the way that herding mentality can conceivably look good at some time, but then if there's a shock and the machines had been overtrained on past data, it's very difficult to know necessarily how they will respond in a future type of environment should something happen, right? And if there's a so-called kill switch, everyone needs to kill it at the same time and then decide to turn it on again at the same time. We're talking about trillions and trillions and trillions of dollars with unknown, and this isn't just about finance, this is like every single possible industry. We have this issue with artificial intelligence. But I think finance is significant because of the speed at which this is going to be deployed. It's also significant because no technology works in isolation. And what we're seeing a lot in finance these days, obviously there's Bitcoin and there's a symbol for Ethereum, is the rise of digital assets and blockchain technologies. We've never seen this before in the history of financial services in terms of a technology having financial value in and of itself. But people are buying this, they're selling it, they're trading it rapidly, it's becoming institutionalized very rapidly. What does that affect then with AI and financial systems that have never had to deal with both AI and Bitcoin before? Now let's throw in IoT. And as we think about devices communicating, and not just communicating, transacting with each other. So IoT and things become part of the financial system, along with digital currency, together with AI. I don't have the answers for you, right? I wish I did, but that's what keeps me involved in this space. I'm no longer with the CM anymore because I'm devoting myself completely towards investing in the future of finance that relates to artificial intelligence, cryptocurrencies, blockchain, and IoT. And quantum, and other things. But it's so exciting to be going and launching a fund focused on this. And as I think, for all of you, and I'm happy if there's time for questions at all, to talk about, the future of finance with artificial intelligence. But again, for myself, I go back to those bones. I go back to the fact that there is a basic human need to want to provide for your families, right? And take care of the people that you love. Money has a purpose, just as AI has a purpose, and together you still have a lot of capabilities and ability to help transform this into something for the future. So I appreciate you listening to me, and if there are any questions, I'm happy to take them.